Hello everyone, I am Hiran Veer from Ignitas, currently pursuing intermediate second year MEC. So today we are going to talk about very important topics in economy, that is CRR, SLR, repo rate and reverse repo rate. So now coming to the monetary policy. Monetary policy is a way a country's central banks like RBI in India and Federal Reserve in USA controls money supply and interest rate to keep the economy stable. The objectives of monetary policy is price stability, controls inflation, sets target of inflation, which sets minimum percentage and maximum percentage of inflation, and erode purchasing power of the people, and prevent economic stagnation. Now coming to the cash reserve ratio CRR. It is a percentage of commercial banks' total deposit that kept as reserves with central banks, and this CRR is not for lending or investment. Purpose of CRR: by central banks to control inflation, regulate money in the economy, ensure bank maintain certain amount of liquidity with them. So how it works? If the central bank increases CRR, banks have less money to lend and therefore helps cool down inflation. For example, if the bank has 100 crore rupees and the CRR is given 4%, then the commercial bank should keep 4 crore rupees reserve in the RBI and it can lend out remaining 96 crore rupees. Stats and analysis regarding CRR. So here we can see that as of May 2022, the CRR is 4.40%, and coming to the Feb 2023, the CRR has been increased to 6.50%, and BPS basis points has been 40 BPS in May 2022 and it has tremendously decreased to 25 BPS to Feb 2023. So by taking the consideration of May 2022, we can see that banks have more money to lend and the economy. So by taking the consideration of May 2022, banks have more money to lend and it gave a boost to economy, and there was lower interest rates and potential increase in inflation had happened. Statutory Liquidity Ratio SLR. It is the minimum percentage of NDTC, net demand and time, that must be made in liquid assets like gold, government securities, etc. Purpose. The purpose of SLR is that banks should have enough liquidity to meet their obligations, prevent bank from overlending limit available fund, and prevent bank from getting bankruptcy. How it works. So coming to how SLR works, if the central bank raises SLR, banks have to keep more liquid assets with them and hence limiting their ability to lend. So lowering the SLR makes more fund available for lending, which boosts the economic growth. For example, if the bank has 500 crores rupees in NDTC and the SLR is given 19%, then banks must hold 96 crore in liquid assets and can lend out rest of amount. Stats and analysis regarding SLR. So as we can see here, in year 1990, the SLR has been 38.50%, and by coming to the year 2017, the SLR has been decreased to 20%. That means by considering year 2017, banks had more funds available for lending, potential for increased inflation, and there was also a risk for overlending, increase in bank profitability. Now coming to repo rate. The repo rate is the rate at which commercial banks borrow money from central banks by selling their securities and agreeing to purchase them at the later date. So as generally common people borrow money from commercial banks, similarly when commercial banks doesn't have money to lend, it approaches to RBI and RBI lends money to commercial banks. The rate of interest at which RBI lends to commercial bank is called as repo rate. So purpose of repo rate is to regulate short-term interest rates, control inflation and manage liquidity. So now coming to how repo rate works. When repo rate is increased, borrowing becomes more expensive for commercial banks, which leads to higher lending rates. And when repo rate is decreased, borrowing becomes cheaper and increase in lending. For example, if the repo rate is 5%, banks will borrow from central bank at 5%, and this rate influences the interest rate paid to the customers. So in the similar way, commercial banks also lend to the people at the same rate of interest. Statistics. So repo rate is determined by RBI. In general, RBI aims to keep the repo rate for around 4%, which ranges from 2% to 6%. As of January 2025, current repo rate is 6.50. So reverse repo rate. The reverse repo rate is the rate at which the central bank borrow from commercial bank, typically selling their securities with agreement to purchase them at later date. So now coming to the purpose of reverse repo rate. The main purpose of reverse repo rate is to control money supply in the country and manage inflation, stabilize the financial system by maintaining the liquidity. How it works. So when the commercial banks has excess fund, instead of lending it to the other institutions, it lends to RBI at a certain interest rate, and that interest rate is called as reverse repo rate. For example, if the reverse repo rate is 4%, commercial banks will park their excess money with RBI and at that rate, rather than lending it to the other institutions. This helps to control inflation and manage the liquidity. Statistics regarding reverse repo rate. So this is statistics regarding reverse repo rate. Reverse repo rate averagely ranges from 3% to statistics regarding reverse repo rate. So reverse repo rate ranges from 3% to 6%, and the present reverse repo rate in India is 3.35%. Thank you.